If you become a larger and larger position in an ETF that is market cap weighted, you get an ever increasing percentage of the flows that flow into that ETF. And your stock price response is, if you put $1 and the stock doesn't go up $1, it now goes up $1.50.
Righto, mate, Ryan. We've got a wonderful conversation with none other than Will Thompson, who manages a fund called Massif Capital. We've had Will on in the past, and I really enjoy speaking with Will because he's one of those people that is just so transparent about everything. It's almost shocking how transparent he is about things.
Yeah, right.
He always kind of articulates his thinking, and he's like, I see him as a bit of an unusual kind of fund manager, and I mean that in a refreshing way. Just his transparency is kind of striking, no matter what you ask him. He shares what he's what it's been like riding the Alphamin emotional roller coaster over the last 6 months, which I found like a particularly interesting part of our conversation. I think the money miners will get something out of this one, Ali.
Awesome. But
first, if you're going to go constructing a mine tomorrow, AG, what would you need?
I would need a hell of a lot of equipment and all the people to go with it too.
Equipment and people, exactly, Ali. Hopefully you have a plan as well. But if you assume you've got a plan, well, equipment and people are going to help you in that construction process. And I happen to know the one name to call for both of them.
Let me guess. It's KCA.
KCA Site Services.
Absolutely.
Guess what? Equipment they have right now. I'm talking about right now, immediately, right this second.
What have they got?
4 12-seater Toyota Hiace 4x4 mine spec buses, Mitsubishi Fuso tipper truck, Volvo 5-ton excavator, 2 brand new ITs right now.
For my hypothetical mine, I'll definitely need an excavator for that one. Thank you.
You're going to need people too, Ali. And guess what? KCA has industry-leading way of getting you the right people. It's sorcery. I don't know how they do it, but they somehow always manage to get the right people. Be it service crew, charger, bogger operators, underground shift supervisors, mobile crusher operators, open pit all-rounders, underground HT fitters. I'm only scratching the surface here.
I think we all know who we need to call.
Just call KCA. Will, has anyone ever told you that you look like Chuck Bartowski?
Who?
You don't know? Oh, this is amazing. I'm so happy. I'll pull up a photo right now. Chuck Bartowski, he's a fictional character from this like pretty niche comedy drama spy series. This guy that worked in like an electrical Best Buy store inadvertently became a spy, and you are a doppelganger of Chuck. I just can't get it out of my head after seeing it.
No one's told me that before.
It hasn't aired for about 13 years. But
you don't need to feel insulted, Will, because Trav told me this morning, and I had no idea who the person was either. So we're all good. I
have no problem with that. Right now, I kind of on my screen at least, I look like a tomato. It's still red. I don't know what the deal is, but I assume your audience won't mind.
You're coming out good here. Thanks again for joining us today, Will. It's been a long time since we've spoken. I want to start this conversation with a little snippet from an article you write, and for people out there curious to see Will or after this conversation, he puts a lot of research out there, so you can go and sign up to it. There was this line you wrote that stuck out to me. In Maslow's hierarchy of needs, the products produced by the Mag 7 are mostly only important for the final few stages of humanity's conceptualized needs. My question is, Will, when are materials or resource companies going to become in vogue again and get the attention that the Mag 7 have had for the last few years?
Well, I'm not sure they ever get the attention the Mag 7 has gotten. I am optimistic that the next 10 years will be maybe not less about technology and innovation and things like that, but at least there'll be more interest in the real assets, at least that my firm invests in. And I think there's a couple of drivers behind that. There's obviously increased defense spending. There's this sort of intense effort on everyone's government's sort of part to create resilience in their economies. All of that type of activity is usually material and energy intensive, and it's going to create increased demand for sort of everything that you guys talk about, and everything that my firm invests in: oil, natural gas, copper, nickel, steel producers, cement producers, chemicals, it doesn't matter. It'll be across the board. So it's never going to be NVIDIA headlines, except when something goes wrong. But I think it'll be of more interest than it has been the past decade. I also think there's at least especially in the United States, there's with technology, we've now sort of reached what appears to be, at least from my perspective, the edge of what our infrastructure as it currently is sort of set up can handle. Data centers, AI, data processing, stuff like that. Our electrical grid, our infrastructure just in general, it can't handle much more without an extensive build out. And so even if it isn't sort of the first headline in the newspaper, everybody's thinking about it, and it's become critically important. And I think even the tech companies are beginning to realize that. So,
yeah, it is fascinating if we look back in kind of history, and I know you tend to do this in the papers you write. You take a long-term time horizon. If we look at the kind of 70s, you go from a period at the late 60s with the Nifty 50 being tech companies all at the fore, into a period where, led through by inflation and those sorts of challenges throughout the period, materials companies really came to the fore. Gold was up sort of 20x after we came off the gold standard. Is that the type of environment you think we could potentially be coming through the late 2020s, where we are spurred on again by things like inflation and the need to build out infrastructure like you touched on there?
So I think inflation is going to be. I've been saying this for a while, actually. I guess I think we're going to experience a lot of inflationary volatility, by which I mean, this year inflation will be fine. Next year it's going to pick up a little bit, and it'll cause some issues. The year after that, maybe it's down a little bit, and it's going to be bouncing around a lot. I think what was really unique about the last, let's call it so let's separate out. You have the end of the gold standard, the 70s to the end of the Cold War. Then you have the Cold War till now. That period from the end of the Cold War to now, what I think was actually really unique about it was how, in the grand scheme of things, calm everything. People didn't worry a lot about inflation. They didn't, interest rates were, just on a downward path and then bottomed. Currencies, you didn't worry a lot about currency risks. It was a calm period of time where you could go into markets, frankly, buy, hold, forget, and not worry about anything. I don't think the next 10 or 20 years is going to be nearly as calm and uneventful, to be perfectly frank, as current markets or as markets are going to be going forward. And I mean, even when we did have events, like the war in Iraq or say the war in Afghanistan or 9/11 or anything like that, markets sort of took it in stride and moved on. I just don't think it's going to be that simple going forward, because I don't think that conflicts and the geopolitical turmoil is going to let up. And in the absence of easy money, those events have more impact, and that volatility is more impactful.
Before we hit record, Will, you shared with us that it took you longer than it ever has to write your quarterly letter for Massif Capital this quarter. Why is that?
So much going on. I just didn't really know what to say about any. I mean, I think a lot of companies aren't quite pulling guidance.
You're not
but
usually
they're sort
short
of
for words,
backing
though,
off.
Will. You're a philosophy major.
Yeah, I know. I wasn't terribly short for words with this time around either. It still ended up being like 10 pages, but I wasn't satisfied, I guess, with anything I had to say.
Right. Why?
Feel like now is a time where someone wants me to say something profound, and I just couldn't come up with anything profound to say.
That's actually a really interesting, yeah, I think quip about right now. I do think like no one has a freaking clue what's going on. Markets are whipsawing, things are completely unexpected. Like these are complex, chaotic systems, and yeah, when the like macro is just so tricky. Macro is like dictating everything at the moment.
Yeah, it's. I also think that when you've got a single person who can say something and move markets, in the way Donald Trump has, that makes it incredibly tricky, because you just never know what's going to come out of him and his administration. I mean, I think Alphamin is like a perfect example in the DRC. Like when I wrote a paper on Alphamin recently, and I think I put the odds of a U.S. deal at, I was like 5% tops, not going to happen. And lo and behold, now who knows if it holds? Who knows if it's any good? I don't know. But to be perfectly frank, the fact that the United States even had people over there to negotiate an agreement and discuss this with Rwanda and the DRC flabbergasted. There's only been 2 trips by a U.S. president to the DRC or to sub-Saharan Africa in the last 10 years. Xi has made like 8 or something. I'm just flabbergasted that the United States, someone picked up the phone and called.
I'd love to explore, yeah, reflections you've had on Alphamin specifically over the last,
Yep.
call it 3 months, maybe a bit longer, because yeah, I think it was one of your highest kind of conviction companies, and when they announced kind of that they were going to care and maintenance, I remember reading a tweet you put up about reflecting on some of the priors that or assumptions that you might have had that might have been incorrect. Can you walk us through, like, how you've been thinking about your investment in Alphamin as everything is unfolded? And I know it's been volatile over the last like 3 months.
Yeah. So I invested in Alphamin, it's initially in 2019. Mine wasn't up and running yet, so it must have been 2019 or thereabouts. I've been invested in a while and have watched events in North Kivu and the Great Lakes region, sort of read about it extensively, studied it as deeply as I can. Haven't had a chance to go over there, although I've tried a couple of times and it's just never worked out. And so I had sort of developed what I thought was a reasonable feel for the political situation on the ground, and had some connections on the ground, and spoke with some people around the time, I guess, October, November last year, when M23 started sort of making much more aggressive inroads into the North Kivu region. And if you sort of lay out the roads and you lay out where artisanal mines are and things of that nature, there doesn't seem to be a lot of reason for M23 to advance in country very far, especially if they're backed by Rwanda and the goal is really sort of more economic capture of minerals and things of that nature, rather than, say, an effort to literally like overthrow the government or something like that. And so I had a fair amount of conviction that M23 wouldn't sort of get to the mine, take it, things of that nature. Management always seemed pretty confident in their ability to operate in that environment. And at least from my perspective, they've done a spectacular job of operating in that environment. A lot of mining firms have done a lot less, with a lot more and a lot better environments than that management team has. So I took this situation as an opportunity to sort of add to my position, and I think I added it 75 cents. and then they announced that they were going to shut down operations, and it tanked to whatever it was, 45 cents. And I added a little bit there. Well, once they turned it off, my assumption was, until this is all cleaned up and they can say we're going to turn it on and we're not going to have to worry about the political situation, at least not immediately. They weren't going to turn it back on, and getting to that point where they weren't going to have to worry about the political situation. I mean, I assumed it would take 2 years, if not a little longer. And I was happy to sit and wait and average down and sort of, take the position and put it to the side and just sort of wait patiently. But I've been just astounded by how rapidly not only the government of the DRC and Rwanda have gotten together on one page, seemingly, and come to an agreement, but that M23 has, it seems, sort of listened to what the Rwandan government has told them and backed off. It was always that M23 was a client, if you will, of Rwanda, but the degree to which rebel groups are clients of other states is always a bit of a question. It now looks like they, for all intents and purposes, were just an arm of the military. I'm a little disappointed given how it all went down. This is the first time I've been disappointed in management at Alphamin, but I've been a little disappointed because it seemed a little, given how fast this reversed itself. It seems like shutting the mine down in the first place might have been them sort of pulling the trigger a little too quickly and acting out of fear without really necessarily maybe talking with the people around them who might have been in a better position to judge how fast the situation would resolve itself with the United States. But it's tough to tell.
You know what I've been thinking about lately, Ali?
Tell us, Trev.
How can we minimise the costs of exploration so that we can find more discoveries?
Well, I mean, drilling's one for start, but it's a pretty expensive exercise, isn't it?
It is. That is a big cost of exploration. But I like your thinking. One of the big costs of drilling that we don't even think about too much, or at least I don't, admittedly, it's consumables. And I'm talking drill bits, down the hole hammers, drill pipes, subs, like casing systems. It's expensive when you're just chewing through parts, which kind of reminds me, BD Drill fixes this. Black Diamond Drilling Services, Ali, they are the go-to name in consumables because their parts go the distance. BD Drill. You want to minimize the cost per meter drilled? You better be using BD Drill consumables in those rigs. They've got distribution hubs across the world. They manufacture over 600,000 drill bits a year under strict QA testing, which means, you know what? It's going to last. Inventory on site everywhere. Use BD Drill, make exploration cheaper, and find more discoveries.
Love it, BD Drill.
I mean, like we also sort of spoke about, though, the global macro environment, the role that the US wants to play in countries around the world over that period, over the last 6 months, has changed quite dramatically. It was, the articles you'd see about the US doing anything in sort of Central Africa there were very few and far between over the past 5+ years. And then all of a sudden I started seeing them a couple of times a day coming through. What do you think is the role of the states in Central Africa, in Zambia, in the DRC, these sorts of parts going forward?
I think these are critical countries for the United States. Let's just call it the West in general. I'll say Japan, Australia, Europe, and the United States. I think these are critical markets for them to be involved in. I mean, you look at something like the DRC, and they've got just a tremendous natural resource endowment, and it is monopolized by China. And it isn't even by China because China's got some special insight. It's monopolized by China because China shows up and basically says, we'd like to do business here. The United States doesn't show up. Europe shows up in some places. Australia, you guys are a little more adventurous than most of the developed world. So, mining firms in Australia, or Australian mining firms are in Africa. But generally speaking, we just haven't been showing up. We've got to show up because this is where the remaining sort of relatively easy geological deposits are in Africa, and it's only because it's underexplored. I mean, the other place would be someplace like Iran, but who knows how long it takes for mining firms to enter a place like Iran. So they're critical markets. It's a critical sort of area of competition between the West and China. And at the moment, China is absolutely winning. But I think, some of the recent headlines you would have seen about the US and Africa have to do with the railway into Zambia from the coast through Angola to get copper out. And, that railway was originally built by the Chinese, but they did kind of like a mediocre job of it. And so the United States, along with partners in Europe, are rebuilding that. And I think that there is an opportunity because a lot of the African governments are absolutely unsatisfied with what they've gotten out of China. The relationship with the United States and with Western countries tends to be tense because we often ask a lot of those countries on a political and social side of things, and China does not. At the same time, now we're starting to pull back on some of those requests and can definitely provide those countries with a broader slate of sort of value add that China is interested in doing.
Mm. And as it relates to Alphamin, how do you think things play out for them from here?
I mean, a lot of it is obviously, the stock's all the way back up to, 94 cents, I think is where it closed today. It's back up to, prices before M23 went into Goma, if I remember correctly. I think going forward, the degree to which, we don't see headlines about M23 is going to be important. I do think that there's an opportunity for them to market themselves correctly as, a Western-facing company in this newly opening territory that the United States is now involved in, and we're providing a critical, essential resource into Western supply chains. And that might allow the stock. One of the challenges with the company was always that it was in the DRC. And so you could run a DCF on the company and look at the result, and you're never going to actually get that price. The political risk is too high. Western investors are too sort of nervous about Africa, so you're never going to get that price. Now, and maybe at the time it was the best you could do was 60% or 70% of that value. Now there's an opportunity that maybe it can get to 85%. So I think there's an opportunity for them now. Execute the restart properly. I don't know where it currently stands. I don't know how far they got in terms of shutting it down. It was so quick. I don't know what, for all I know, they may have just basically pulled everyone and shut some things down, and, it's not going to be hard to turn back on. But they definitely have an opportunity, I think, to try and close their valuation gap in a way that they couldn't prior to this U.S. agreement.
Is the capital management part like the dividends? The divi yield has always been tremendously attractive on Alphamin. Like, do you think that will kind of return?
I think the dividend yield or the dividend, I think they'll start paying the dividend as quickly as possible. We got to get an estimate of what it costs to restart the thing, but they've got a strong balance sheet, and, they've got plenty of cash. So I would be surprised if, we don't get dividends almost, sort of immediately on, maybe not on schedule, but basically on schedule relative to what they were going to do, if they hadn't interrupted operations. Some delay, but I can't imagine that it would be much. And then the other thing is that with their ownership, the private equity firm that owns a big slug denim, that dividend is how that firm gets paid on that position. So I think it's in everyone's interest that the dividend get going as soon as is feasible. I have no doubt that they'll manage that sort of appropriately relative to their balance sheet.
If we move one country to the south, Will, you wrote a paper on Zambia as a sort of emerging copper player, a kind of sleeping giant, a country that had produced a lot of copper in the past and then sort of mismanaged to an extent at a national level. And you've started to play that through a few juniors. But if we start nice and broad, what kind of role do you think and what kind of confidence do you have in the country being able to execute on pulling all the majors back in and growing its profile?
Yeah. I mean, look, at this point, I don't think globally the world is at a point where we can really afford to let countries like Zambia that have tremendous geological endowments in critical minerals just sort of fail to monetize them in some way, shape, or form. I think that it's definitely an uphill slope for a country like Zambia. They have some majors in there thing, but the infrastructure, if you will, that needs to exist, not just the physical infrastructure, but the legal infrastructure, things of that nature. It needs to be a little more tested. And it needs to continue to evolve with the demands of the situation. There's definitely going to be some hurdles. Electricity already is a hurdle in country, so there are some obvious hurdles like that. But they have a desire. They have the resources to become a major player in copper. And so there's no reason why they shouldn't. So I think it's going to be slow, but we've got some smart people in country, and being part of that sort of Central African copper belt with the history that they do, there's a lot of copper there and a lot of reason to believe there's more. And it should be relatively easy deposits, in the grand scheme of things.
One of your portfolio companies, Prospect Resources, really recently had announced a strategic investment from First Quantum, who is one of the majors in country, and has built a tremendous brand in operating in Zambia. You must have interpreted that as a big vote of confidence in your strategy of picking juniors.
Yeah, so just to be clear, I talked about a couple of juniors in there in that paper. Prospect was one of them. I'm not invested in Prospect. We have a position in Midnight Sun.
Gotcha.
But I absolutely think that both the majors like First Quantum there are a vote of confidence, and they already have some mines in the region. Ivanhoe is looking. Cobalt Metals, which is the Bill Gates backed AI mining firm. We'll have to see what comes of it, but they have a lot of really strong geologists on their team. They're there in a big way. So there's a lot of people betting on Zambia as an opportunity for the West to sort of catch a march, I guess, on resource development in Africa relative to, say, China.
Talk us through the Midnight Sun play just briefly. They've been on a good run, Will, and they're a early stage junior. Why did you go down to the junior end to play the space?
Well, I don't tend to invest in a lot of majors. Every once in a while, I'll invest in a major, a First Quantum or Barrick Gold or someone like that. But it doesn't happen very often. But I don't usually go quite as early as as Midnight Sun either. I'm usually more of a invest in development. Midnight Sun is exploring, but what they've found, and more importantly, the commentary I've seen, and the people I've spoken with at Cobalt, which is again the Bill Gates backed firm, just think the geology is spectacular. And again, you're on that same trend as mines like Kamoa Kakula, big, reasonable grade, mines that are going to be sort of tier one producing or capable of producing, 400,000 tons of copper a year or more type of thing. And from my perspective, small mines, big mines, the risk is the same. So you better go big. I think the Lundin family always talked about hunting for elephants, right? You want to go hunting for elephants. Where you're going to do it is a place like Zambia, or you're going to do it, these days in the Vicuna, high Argentina, which is going to be easier, probably be a little easier in Zambia than it will be in Argentina, although I'm also invested in Lundin Mining so that's what attracted me to it. And just sort of looking at the DRC, you sort of look at it and you say, well, where does one go next? Let's look around the area. And the obvious place is Zambia. So what's happening in Zambia? And Midnight Sun appeared to be the team most in a position to capitalize on what they'd found. They not only have a deal with First Quantum also to provide one of their copper smelting operations, copper refining operations with oxide ore that they've discovered, which should in theory be a sort of a quick to free cash flow sort of situation. But this relationship with Cobalt and relationship with other firms, they've got a lot of ties to majors who are going to be capable of developing these assets and capable of developing the mines. And I'm always looking for sort of that additional optionality. They just had a lot of optionality.
If we look at the gold part of your portfolio now, Will, I'm keen to explore this and the way you've kind of played it. It's a bit interesting. So what I could kind of gather, it's 14-15% of your portfolio, largely made through two bets, one in G Mining, the other in Equinox. Why don't we start with Equinox? They are doing a tie-up with Calibre. What did you make of the deal when you first heard about it?
Well, when I first heard about it, I was a little annoyed. I sort of thought that this year they might just sort of quietly start producing gold, and maybe there'd be a little free cash flow, and they'd tidy up the balance sheet a little bit and things like that. I hadn't really given them a hunting license, if you will, for this year. That being said, after I had a cup of coffee and looked at the assets and things like that, I think it makes good sense for Equinox shareholders. I'm less certain if it makes good sense for I'm blanking on the name now.
Calibre.
Calibre, thank you. I'm less certain if it makes good sense for Calibre, but
You're all good
that'll be
then.
for them to decide.
There was actually, I read a tweet this morning, believe it or not, about Equinox. It goes, what's the most disappointing gold stock 2025 to date? Not necessarily underwater, but one that has failed to live up to expectations. I'll start Equinox Gold. From new mine re-rate anticipation to empire building at any costs, shareholders footing the bill. You would be disappointed though if you kind of, if you were expecting a re-rate as Greenstone was ramping, and it's a massive mine, and instead you've got kind of the overhang of a deal and shareholders that are kind of weighing up whether they want to hang around or not.
Yeah, look, I mean, I've been invested in Equinox for 6 or 7 years now. It has not been the easiest investment. I've made money on it. I've trimmed it at times, but I've maintained this core position probably far longer than I should have. They said they wanted to be a 1 million ounce producer. They've always said that. And Ross Beatty has a thesis that I don't think is without merit, that in order to be a sort of productive gold miner these days, you need to achieve scale. Because if you don't achieve scale, markets aren't going to pay any attention to you, and it's just going to be, us on Money of Mine talking junior miners will be the only investors when what Ross Beatty really wants is BlackRock and Vanguard money. If you want BlackRock and Vanguard money, you absolutely need scale. He's spot on about that. If you want scale, you've got to be producing more than 1 million ounces. So, I mean, that all ties together in my mind. The question was always, how do they get there? They've had a lot of growing pains in trying to get there. But I think if you sit back and you say, well, how do you build a 1 million+ ounce gold miner in less than a decade? There's going to be a lot of growing pains, and you're going to need a very patient shareholder base to get past that 1 million ounce mark. And that's the role I've served, at least, as a very patient shareholder who is understanding of the goal of getting to 1 million ounces in scale. That should pay off in the fullness of time, but we'll have to see.
I'm probably a brave person for challenging Ross Beatty on anything, but I almost wonder if the opposite is kind of true for mining companies insofar that if they what's the sweet spot number of operations where you don't need an extra level of management? How can you stay lean, nimble, very efficient, and that's proportionate to the number of operations you have, the number of geographical kind of areas that you operate in, and the rest. And we all know that the mining companies that pop up and create tremendous value, they do keep things lean. They've got a core team, and they're across all of the operation stuff to the top level. So the scale thing kind of makes sense in my head from the perspective of being market relevant, but I don't actually think it maximizes total shareholder return. I think it does maximize your pay packet at an executive level. There's no doubt. The only way you get that is by empire building, but I don't think it maximizes total shareholder return necessarily.
So I think, so I think it's going to depend. If I think there's probably a lot of truth to what you say. It'll be a function of whether it attracts flows or not, though.
Mm-hmm. Yeah, certainly liquidity, all that sort of stuff.
If he can truly attract flow, and it gets up there with, I don't know, Barrick and Newmont. I mean, it's not going to be that many ounces, so it's not going to be quite there. But and can play a bigger role, an ever bigger role in ETFs, and benefit from the inelasticity of being a larger and larger. If you become a larger and larger position in an ETF that is market cap weighted, you get an ever increasing percentage of the flows that flow into that ETF, and your stock price response is if you put $1 and the stock doesn't go up $1, it now goes up $1.50, and then it goes up $1.75 when you put $1 in, et cetera, et cetera. I don't know if he thought through it that deeply, but there is some logic to that, and so I do think you're right on a pure fundamental basis for sure. I don't think it is going to generate the total shareholder returns, the free cash flow, et cetera, but it might surprise in the stock price.
It's all good. You just put a chart of the market cap growth then instead of the share price growth, as I think they did in that presentation. It's an interesting one. I mean, one of the other benefits as well is the cheaper cost of capital for future deals, which they'll no doubt do. And it'll be interesting to see how they go about cleaning up the portfolio. From memory, they've got 8 or 9 producing assets now, and each party brings one chunky one, and then you've got a tail end of assets through Central America, and
one less as of a week ago. There was some non-renewal of one of their mines.
Oh, that's
I mean, they've got
the question marks on the Mexican one.
Yeah, Los Filos. They've got to figure out something with Los Filos. First they got to obviously get this merger done now. So it's not like they don't have plenty of things to do. Then they absolutely have to figure out Los Filos, but then they probably, they have these a mine in Brazil called Santa Luz, and they have a mine, RDM gold mine. Both of those are in Brazil. They probably can jettison those at this point. They probably should try and find someone to buy them. You know, Mesquite in California, somehow they managed to keep finding ounces there and keep producing, but it's not, it's not the greatest mine in the world. And once Castle Mountain is up and running in a couple of years, they probably should get rid of that too. So there are definitely some mines that they should probably jettison, that as they continue to grow, hopefully, sort of just become more trouble than they're worth.
Agreed. If we stay in Brazil on the point, you've also mentioned G Mining, which is a really cool story. Mining services company that's coming into the space of wanting to own assets, as many of them actually want to do, but they're putting it into practice. And I think you said, when I listened to you, you said they've built 90 plus processing plants around the world, and now they're producing from Tocantinzinho, if I'm saying that one right, and they've got a development asset which they should hit FID on later this year. How long have you been playing G Mining?
Yeah, so not all that long, I guess. So the Guyana asset they have is called Oko West.
Yeah.
And Oko West, they bought from Reunion. I was invested in Reunion, and that's how I actually came to G Mining. And I'd heard the name, but I just had never actually looked at it until they made the offer on Reunion. And I was in Reunion because of some of the people that were involved with Reunion and some of their track record. And then I started digging into G Mining, and they're the service side of the business just has such a good reputation and has done such a good job at all the sites that they've operated on, that this transition to building and owning the mines outright kind of made sense. It was quite an intriguing move. And so the combination of the success they had putting up the you did a better job pronouncing it than I'm going to, the
Call it Toka.
kind of Toka, the Toka mine. It just made sense to sort of continue to hold my Reunion gold, or what had been a Reunion gold position. And over time, I just continued to build into it. I think I made my last purchases in sort of like November of last year. And so have held it since, although I did recently trim it because it got to be 14% of my portfolio.
Yeah, and the Guyana asset looks pretty special, and there's a lot of interest in that the Guyana Shield at the moment. Rumor that G2's potentially going to get there'll be a deal with Anglo Gold in the near future, and yes, it seems like a pretty interesting kind of part of the gold growth stories that are out there at the moment.
Yeah, well, it's definitely one of the last couple of years, I guess maybe over the last 10 years, it went from being, one of those underexplored areas to now an area that is, sort of ripe with, geologists running around looking for opportunities. And they certainly have found some. And yes, I think Oko West looks like it'll be a pretty great deposit. So
I'm really keen to hear you speak a bit more about your portfolio construction, because the way you kind of piece it together against some of the other funds that we speak with, you take relatively large positions, A lot of others might talk in the 1s, 2s, 3s, 4% of the portfolio. Do you have sort of bands within each commodity? And I know you're not just in mining, you're spread across industrials and these sorts of things, but do you have sort of max sizes that you can sort of allocate to certain parts and that kind of guides your thinking? And then you like to actually not be spread across too many names when it comes down to, whether that be gold, copper, energy. How do you think about that?
So, portfolio construction is really tricky. I think it deserves a lot more attention than people give it. And I think it's an area where there is more opportunity to add value for your investors than people tend to think. I can't really get much better at analyzing a balance sheet. I've looked at them and probably about as good as I'm going to get at analyzing a balance sheet. But there's still room for improvement and innovation in portfolio design, I think. So in my case at the moment, as you said, I invest in energy, materials, and industrials. I aim to roughly put about a third of the portfolio in each of those categories. Inevitably, I end up with more like 40% energy, 40% materials, and the remainder in industrials, rather than it being evenly divided across all three. But then after that, it becomes more of an exercise of looking at how much correlation I have between different companies and different assets and different commodities. At the individual position level, though, the way I approach my sizing is I've sort of figured out this is what I'd want a 10% position to look like. If I was to say go into a company on day one and just put 10% of the portfolio down on day one, this is the criteria it would have to meet. And then position sizing is scaled basically linearly off of that. So let's say it's let's say I demand a solid balance sheet, and oil companies are a little easier because they have usually good dividends. Let's say for an oil company to be 10% position, I demand a 10% dividend. This company is interesting. It's got good return potential, but it's only got an 8% dividend yield or a 6% dividend yield. It's going to scale smaller on this sort of linear system that I have set up relative to the perfect position. The perfect position is something I can go into with 10% of the portfolio on day one. And so that's how I sort of manage the position sizing. And then after that, I think that initial position sizing is relatively easy and straightforward. It's the management of the position to the life that is actually much more tricky. So how large do I let G mining get? In this case, I let it get to 14%. And then the beginning of last week, I trimmed it. And I'd love to say that I have a really sophisticated way to decide that now is the time to trim that position. But the reality is that I looked at gold positioning. I looked at, sentiment around the economy. I looked at news flow. I looked at the fact that the gold price was sort of starting to trade sideways, and I had no fundamental catalysts. And sort of all of that together, I said, okay, so now's the time to trim it. And I actually trimmed it back to the level that my sort of linear scaling said it should now be at. So it said it should now be more like a 7% position in my portfolio, given all the possible sort of returns that I expect from it going forward. And so I've scaled it back to that. And actually, I suspect I probably need to scale it back a little bit further.
So your perfect position is 10%. Do you actually come across many companies that meet that top-notch criteria?
No. So, and actually my top position size is 8%. It's not actually 10%. It's easier just to think about things in terms of 10%.
Gotcha.
It's 8%, and no, I don't know if I've ever actually put anything on at 8% on sort of like day one. It would have to just be spectacular because then my room to average down is quite limited too. It's got to fall pretty precipitously for me to average down. And admittedly, I would say my first purchases, no one is worse at their first purchase than I am. Every first purchase I make is like 25% above where my last purchase is. But I need room to average down because I'm always early, it seems like.
You're uncharacteristically self-deprecating for an American, Will. Like you're genuinely one of the most unusual fund managers, I reckon, that we've spoken with, in the sense that like you're a North Carolinian that cares about and invests in mining stocks. You run a one-man fund. Like it's kind of perplexing to me that you can outsource everything, and it's like the fund is you and only you. That's kind of like just a remarkable thing to think about.
Well, I'll make it even a little more confusing. I'm not actually from North Carolina. I'm actually a Connecticut Yankee.
Oh, that probably makes sense.
Lived
Yeah,
in the South
gotcha.
and spent his entire life on Wall Street and in New England private schools. I never got within 1,000 miles of a mine before I decided I wanted to invest in mines.
Perplexing. But I respect the strategy to be different and seek alpha where others are kind of not playing.
Yeah.
I think that's
We are
very
trying.
strategy.
I am trying to expand the team now, though. So
Yeah.
I'm hopefully not going to be a one-man shop for that much longer.
Like I think you're the only person I've ever met that has like successfully outsourced absolutely everything. Like I've never heard of that before. Maybe it's a more common model in the US.
Yeah, I don't know. I don't know how common it is. I mean, the ability to outsource things here in the United States and the acceptance of that by family offices, institutions, high net worth. High net worth, it's easy. Family offices, it's a little bit of a higher hurdle. But both family offices and institutions at this point are pretty accepting of the outsourcing. They're frankly less accepting of the one-man person, sort of my one-man person hood, if you will, than the outsourcing.
That's kind of like my next question is, I mean, you have to worry about everything, the running of the business, the marketing, like relationships with your investors, while also kind of keeping tabs on every single stock and also seeking new ideas. I'm curious, like what are your strategies for idea generation when there's unlimited desires for your bandwidth?
So I try to keep my calendar as empty as possible. So I don't schedule a lot of meetings. I mean, today you guys are the first people I've talked to all day. I've been here in this.
We should add for the listeners that you're speaking to us at, I think, 8 p.m.
Yeah, 8 p.m. Yeah. Or I'm sorry, it's 8:58 p.m.
There we go.
So my day starts at 4:45. And it's basically, I usually kick off sort of around now. And if I didn't have this podcast, I wouldn't have talked with anyone all day, other than a few chats with people on Bloomberg. So I try to keep my schedule just open and mostly just spend the entire day reading and writing. I would say that I think I generate most of my good ideas from reading something and then trying to write about it and trying to fit the pieces of what I'm reading together and then saying, oh, there sort of looks like there's an opportunity or a gap there. What is the company that's filling that gap in either, sort of the argument that I've decided to make about something or, the evolution of an industry or something like that. And I try to read really broadly. I also try to focus most of my time and effort on, sort of places like Africa, right? Where I don't think other people are. So for instance, like you guys couldn't ask me anything about fracking for the way I know nothing about them. I've hardly ever even looked at a fracking, like an oil and natural gas producer that's a fracker. Why? Because there's tons of people here in the United States who spend all day, every day, doing nothing but thinking about U.S. oil and natural gas firms in the Permian. I can add no value there because I am so far behind. It would take me a good, 6 to 9 months of consistent work just to catch up. So I try not to spend my time in areas that I expect others are going to be, sort of focused on it. And so that's how you end up with things like the Zambia play, or we're invested in a company in Japan called Oregano, which makes equipment to purify water to the specifications that biotech firms need and semiconductor firms need and stuff like that. Real sort of niche-y, techy stuff, but that's not niche-y and techy in sort of the way people think about it these days, apps and stuff like that. So I often find reading things like Nature or science journals to be really helpful, because it sort of gives you an idea of where the edge of an idea of where the edge of sort of like commercial operations are. And so you sort of say, okay, this is science. What's just below this sort of science and lab? And that's sort of an interesting place to look. So I don't know if that answers your question.
Yeah, I find it intriguing. I wonder if like the future of the future of funds management in some ways becomes a lot more like individualized. Like I know there are regulatory like obstacles and costs, but capital is like pretty fluid and can follow performance. Maybe just tracks individuals.
I do think there's going to be a change. So, one of the reasons I struggle with trying to hire someone right now is because I've got an advisory board and I have, an investor in my actual like management company, they'd like me to go out and hire, say, someone who comes out of Millennium or someone who comes out of Citadel or something like that, someone who has their own ideas. And I find that that sounds like a freaking nightmare to me. I don't want someone with their own ideas. Everything, in the end, I'm the portfolio manager, so I've got to sort of backstop everything. So, having someone with their own ideas seems hard to me. Because I mostly just want them to work on my ideas. I don't want them to work on their own ideas. So one-man shop in some regards works really nicely for concentrated portfolio in equities and stock picking. I do think that the industry is evolving. So as you guys sort of noted earlier, we have a research product out now. My entire business is sort of research. And so the idea of also selling some of the research to the degree it doesn't conflict with my sort of fiduciary responsibilities makes all the sense in the world. I think that the industry needs to evolve a little bit because we now have really big guys, and that middle is a really hard place to be. A couple of $1 billion with a big team, the economics of it aren't actually all that great. Whereas at my level, the economics really aren't that bad as long as I continue to add capital and it gets to be quite good, and selling the research at the same time and sort of being multifaceted in that way, providing some consulting to institutions that are looking at mining and things like that. That diversification is a really nice business, and it all of it adds to all the other parts of it.
Yeah, I actually heard you talk about the Multistrat fund that was like effectively kind of piggybacking on your alpha. Did they actually like, so did they contribute funds to you under management, or is it just idea generation that they're paying for?
Yeah, no, so they just pay for idea generation.
Gotcha.
They deploy my portfolio, lock, stock, and barrel with a few caveats. Related to their institutional sort of or their investment criteria. So like they don't do anything with ETFs. So if I put a position on that's an ETF or something, they're not going to do that. But any individual stock that I invest in, they also invest in. They scale it proportionally, appropriately for their portfolio, and size it according to their sizing criteria, which is different than mine. But that all occurs on their end, and all they're paying for is sort of the flow of ideas. I think I'm sure there's a difference between what Millennium and Citadel is doing and what these guys are doing, but the returns are no different. I would be surprised if there isn't a lot more of what this Multistrat sort of model is attempting doesn't come down the pipeline, because it's a lot more cost effective for sure. And I mean, my business in theory could be nothing but servicing them. Have bigger ambitions than that, but from a lifestyle perspective, it's sufficient to have a nice lifestyle. So I could see why a lot of, people who might like to start a fund, but maybe they don't want to go through the process of the fundraising, stuff like that, would gravitate towards it if there was more of these different types of firms.
When you talk about the fundraising aspect, how receptive are people to a kind of natural resource, materials, energy focused investor in your part of the world?
It's pretty binary. People are either interested or they aren't. And there's a lot of people who just don't know anything about it. And so you've got to talk with them before they can even decide whether they're sort of it's for them or not. Like I used to never, but it's a constantly evolving. Like I used to never talk with anyone in California. Now I actually have I've had reasonable inbound inquiries from family offices and institutions in California who I guess have just been sort of overweight tech for so long, and they're now looking and they're like, well, what do we do next? How do we bring more balance to this portfolio that is, way too heavy on VC stuff or something like that? I do have more traction, I find, in Europe, talking with European families and European institutions. They seem to get what they get the companies I'm investing in a lot more. And in Asia, there's absolutely more just sort of acceptance, understanding, and interest in the types of businesses that I invest in than say in the United States. I think that just is a function of where they are in their economic development, and thus what everyone is familiar with.
How much of
that's just a theory.
If you're willing to share, how much of the capital comes ex North America or ex US?
Third, a little bit more, maybe. Yeah. A little bit more. Probably, I suspect over the long haul, it ends up running closer to 50-50. And it could, I think if I was in Europe or if I was in Asia, it would obviously be I'm in the United States, and it's just easier for me to be here and market and meet with investors and things like that. That is Asia. So
it's been brilliant to explore all avenues of the mining companies, but also the funds management business on this call. Will, it's late where you are, so we better let you get to bed. But thank you so much for joining.
Thanks, Will.
Well, I do appreciate that, and enjoy your show, guys, tremendously, and obviously happy to hop back on at any time.
Awesome. Thanks, mate.
Good work, Trav and team. That was I'm sure I'm about to listen to what a great episode it is. So
thank you, Will Thompson.
And thank you, Will.
Wonderful insight. And thank you to our wonderful partners too, Ali. I mean, if you you're going to head to the GRX conference, which you should, make sure you use the discount codes in the show notes. Get your discount to go to that wonderful conference. But I think Mineral Mining Services, Ground at Sandvik, Ground Support, CRE Insurance, K-Drill, KCO Site Services, Black Diamond Drilling Services, Cross Boundary Energy. Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.